Are you concerned about a market crash in 2014? Well, so am I. So join us with Alessio Rastani, the Robin Hood of Wall Street, for a free trading webinar. Learn how to protect yourself and possibly profit. It's on December 5th, 8 o'clock British Standard Time. You can click on the link below or go to leadingtrader.com/2014. I'll be there. Educate yourself and get the edge.
In 2006, I was telling my friends, family, in seminars, we were doing seminars all over the country. We were telling our own customers, our clients, be careful, be aware, we're going to have a crash in 2007, 2008. Again, we didn't know exactly when it was going to happen. We knew it was soon. And there's actually a question I want to ask you later, Peter, because I'm just astonished by the level of how disconnected people were at the time. Smart people, on CNBC, and yet how completely in a bubble everyone was at the time. Something I want to come to, if you don't mind, Brian.
Yeah, I just want to get your thoughts on where we're going next year.
But about what the levels of debt, what Peter said in those interviews on CNBC, one thing he mentioned, we need a recession. We need to have, I think a very smart thing. People don't get it, because I said pretty much the same thing a couple of years ago. I was on BBC. I said, look, we need, what I said was, in a different way, I said I was dreaming of a recession, which people, of course, misinterpreted.
Right.
What I was trying to say was we need to have a recession. It's an opportunity. But look, here's the thing. If I can show this to your viewers, this is from the New York Stock Exchange. This is an actual report from the NYSE. And it goes to what Peter was saying. And this is why I believe we will have a crash in 2014, sometime after May 2014. What this shows is the levels of debt, or the net worth of investors. And it shows right now, if you look at this graph, I wonder if I can hold this to your people. What this level shows is the net worth of investors is negative. Right now it's negative. This is margin debt, by the way. For people who don't know, margin debt is the level, is leveraging, where people are borrowing.
I don't want to get too technical here, but you're saying
Sure.
middle of next year.
Exactly. Basically, cut out all the jargon. What I'm saying is, look, the levels of borrowing and debt that people are getting in investing in stocks right now is negative more. Look at it, 2008. This is before the crash of 2007. That was where it was below this red line, above the red line. Look where we are now.
Okay, understood. So your call is mid next year. Peter.